Credit score, FICO, interest rates, all these confusing numbers that don't make any sense and they never taught you in school. If you're wondering what a credit score is, what makes up your credit score, and how to improve it so that you can get better loans and financing in the future and save a ton of money over the course of your life, then this video is what is for you. I made this video for you to show you exactly how a credit score works, what it's made up of, and how you can improve your credit score to get better loans and better financing options, better interest rates. Now, no one really knows exactly what goes into a FICO credit score, but they do say that it's made up of 35% payment history, 30% credit usage, 15% length of credit history, 10% types of accounts, and 10% recent activity. So what does all this mean? Well, 35% is payment history. So the payment history is, do you pay your bills on time, and how much history is there of you paying your bills? If you've only been paying bills for 1 or 2 years because you're a young adult, it's not going to be as good as someone who's shown 5, 10, 15 years of on-time payments every month. So a lot of that you can't control, but what you can control is just making sure you pay all of your bills on time every month. The next is 30% is credit usage. So this is how much of your credit are you actually using. You don't want to use more than 30% of your credit cards in any given month. Now, if you do have to use it for something, or if you want to use it to get the rewards, just make sure you pay it off below 30% before the statement generates. So 15% is your length of your credit history. This is another one you really don't have any control over, unfortunately. It's just how long have the credit bureaus been reporting. 10% is types of accounts. So they actually want to see that you're responsible enough to handle different types of loans. If your only loan is a car loan, then it's actually not going to be as good as someone who has a mortgage, a car loan, and a credit card, and they keep all of those paid on time every month. They keep their balances low, and they're responsible with that different types of payments. And then finally, 10% is recent activity. So this is going to be everything you've done recently. Have you opened up a bunch of new credit cards recently? Have you had your credit checked with a bunch of hard inquiries recently? So what is a good credit score? Well, credit scores can range from 300 to 850. Well, if you've got 300 to 579, you're probably not going to qualify for much lending out there. You definitely want to work on getting that above 579. And don't worry if you're in this range. When I first started working on my credit, I started in this range. I was in the low 500s, and it only took me a couple of months to get myself into the 600s and about a year to get myself in the 700s. So you can do this very quickly. Now, if you're in the 580 to 669 range, you can start to qualify for loans. You could start to get some options out there. The interest rates are probably going to be really high, and the terms are probably not going to be the most favorable. You might have to put more down on a loan than normal. You might have to deal with a higher interest rate, but you can really start to qualify for some loans. But when you get to the 670 to 739 range, you could pretty much qualify for any type of loan out there. You might not get the best interest rate, but you're still going to get a really good interest rate. Getting to that 740 mark is really key to getting the best possible loan options you can get. Anything above 740, you're pretty much going to be offered the best interest rate, the best loan terms out there. So that's a key milestone to get to. So the next step that you guys need to take for your credit score is to improve your credit score. So I'm going to give you 4 quick tips on how to improve your credit score. Number 1, make sure you make all your payments on time. This one should go without being said. All you have to do is set everything up on auto payments. Pretty much every bill collector out there now will offer some kind of auto payment option, and I recommend setting everything up on auto payments so you just never miss an on-time payment. Number 2 is to keep your credit card balances low. So a lot of people think, oh, I have $10,000 on my credit card. I can spend that $10,000, and as long as I'm paying it off at the end of the month, I'm doing well. That's exactly what I should be doing, right? Big part of your FICO score is actually how much of your credit you're using. It's considered risky to lenders if you're using the maximum amount of allowable credit that you have access to. A couple things you can do if you need more than that, or if you want to get more rewards points, as long as you're paying your card off every month, you can call to get your credit limit increased. And this will actually help because let's say you have a $10,000 limit and you put about $5,000 on your card every month and you're paying it off in full. You're using 50% of your credit, and that is considered to be a lot. But let's say you call and get it increased to $20,000 and you're still using the same $5,000 amount. Now it's only 25% of the credit that you have available because you just increased your credit limit. Never buy something that you don't have the money to buy. You know what I mean? Number 3 is to actually open up accounts that will be reported to the bureau. So if you're early on, or if you're trying to establish credit, or if you're trying to improve your credit score, it is actually healthy to open up lines that will be reported. The most obvious one is a credit card. And there are credit cards that are offered to people with no credit score. Usually it'll be a very small limit to get started. And again, make sure you don't use more than 30% of the limit. As long as you're using it to buy something that you would already be spending money on and you're paying it off in full every month, it's a good idea to get this established so that you can start to establish a credit history. The 4th recommendation is to only apply for credit when you need it. If you're opening up a credit card at every retail outlet you go to because they're offering some kind of a sweet bonus offer and you get 5% off today on your purchase if you open up a credit card, and you're doing this all the time, it's actually going to look really sketchy and really bad for your credit score, because it looks like you're always needing to open up new credit lines. That just looks like a risky thing to lenders. So only open up credit when you need it. I highly recommend staying away from all these retail credit cards that are out there. Usually the introductory offers are really enticing, especially if you've got a big purchase you're making that day. After that, that's all they're really worth. So my last tip before you go on your credit score is to monitor it monthly. Now there's a lot of services out there that will offer this. A lot of them are even free. There's mint.com. Almost every bank and credit card company has their own monitoring service. However, a lot of these only pull one of the 3 bureaus. There's actually 3 credit reporting bureaus. There's Experian, Equifax, and TransUnion. And typically lenders are going to pull all 3 scores, especially if it's for a big loan like a mortgage. And they're typically going to take your middle score as your credit score. So I highly recommend going to Experian. They've got a great website. You can actually see for about $30 a month, and it sounds like a lot, but it's worth it if you're trying to establish a good credit history. You can see all 3 credit bureaus in one place. And Experian actually has something called Experian Boost, where you can link your bank account to show your on-time payment history with your different utility bills and other types of monthly bills that come up. And it will actually boost your Experian credit score by a couple points depending on what that payment history is. You actually have the right to have one free credit report pulled for you per year. You go to annualcreditreport.com. Annualcreditreport.com. You have the right to once a year get a free copy of your credit scores. Anytime someone pulls your credit, you have the right to see your scores. So if you're applying for a mortgage and they pull your credit scores, make sure that you get a copy of that and you get a copy of the full credit report, all 3 scores, so that you can look at it and know where you stand.